Morning, everybody. Hi, my name's Mark Foley. I'm the Senior BDM for Roma Finance. Just to let you know, we are recording this morning, and this will be available on our website. And I think Natalie will be sending it out to you anyway, so you can sort of refer back to it. So, in terms of what we're looking at, we're looking at the commercial opportunities in the current property investment market. So, as you're probably well aware, in the last 3 years, the property has been very sort of turbulent, very up and down. But what we are seeing is there's lots and lots of opportunities in terms of the property investment market. So investment being sort of the key word here, which we'll run into shortly. So yeah, the commercial market is very, very much alive, and it's very much evolving. So we've seen significant sort of changes in the commercial market. I think we've all seen sort of and noticed there's been much lower demand for office space due to hybrid working, remote working, obviously on the back of COVID. Generally lower tenant demand in the retail space due to the ever-changing high streets. But on the positive side, we've also seen stable demand for warehouse and industrial space, probably on the back of those points I've just raised. So what we're seeing is sort of property developers, investors can now buy a lot better and sort of sell a lot better too. So there are really lots of opportunities out there. And also on a positive, I think we're starting to see materials becoming a bit more available, and also the cost starting to reduce, because I think generally the UK's import costs are starting to decline. But in terms of the major point, in terms of the commercial sort of market sector, is the exit is very much key. Make sure that the exit is viable, it's doable, and generally probably have more than one option. So if one of those options doesn't work for whatever reason, you've got a fallback situation. So what are we seeing? We're seeing a lot of commercial stroke semi-commercial refurbishment in terms of enhancing rents, returns. Generally, people seeing properties that are slightly run down, or even really well run down, in terms of opportunities to maximize on those rental returns. We're seeing commercial to residential conversion because of obviously high street, and we're also seeing some commercial into sort of semi-commercial, where they're sort of retaining the commercial element on the basement and also converting sort of the upstairs to flats, and big opportunities there. So in terms of what are we seeing? Well, in terms of standards, sort of the buy-to-let market is still buoyant. So lots of houses, flats are being bought, renovated, upgraded into sort of standard buy-to-lets. HMOs continue to be very, very popular because of the rental yields. So again, HMOs can derive from residential, commercial, a whole range of sort of properties out there. Clubs, probably not so popular now. I think we've gone through a spell where a lot of social clubs, because of the way the market has gone, those sort of have probably been sold off. But in terms of pubs, yeah, still very much a lot of pubs are struggling in terms of the market, and generally pubs come with land, car parks. So I've sort of seen a lot of sort of opportunities. Had a particular application in a couple of weeks back where the pub was actually originally a house that was converted into a pub, and now it's going back to a substantial residential house. There was also planning in place for another residential property to be built, and that was being sold off as a plot with planning in place. Another example was a former care home where it is being converted into a large 21-bed HMO. So it was, yeah, great opportunities there. And similar to hotels, numerous conversions from hotels into HMOs, flats, and also sort of bespoke sort of opportunities, a combination of type of living, potential holiday lets. So lots of opportunities across all of those type of properties, really. So where Roma actually sits in terms of commercial, the loan to values that are quoted here are pretty much on the conservative side. So in terms of commercial bridging, we normally sort of kick in around 60% loan to value, but we can get up to 65%. And similar for semi-commercial. Again, we sort of kick in around 65, but for the right sort of proposition in the right area with the right potential, we can get up to 70% loan to value day one against that type of asset. In terms of commercial development funding, we're generally around 60% to the loan to GDV. If we also take on additional security, so if any of the clients are struggling in terms of funding towards the in terms of deposit monies, we can take on extra money. And similar, you know, if they want us to invest some additional monies into the project, we can always look at additional security. So in terms of where we sit in terms of loans, we sit in the smaller sector in terms of our loans generally start around 75k and sort of max out around the 2 million mark. However, we can get up to 3 million in the London area. And our rates are generally competitive. We sit favourably, very in sort of the light, heavy refurb arena and also ground up development. So in terms of what we feel at Roma, the relationship is vitally important between the developer, the broker and the lender. We tend to see around 50% of our borrowers come back to do repeat business. And I think obviously the second and third deals become a lot easier. We get to know who we lent to and develop that relationship. So we feel that repeat business is key to all of those parties. So in terms of due diligence, what do we look at Roma? What type of customer do we look for? And there's probably three areas where we sort of break that down to. We look for obviously the experienced property professional, individuals that are successful in their own field. So that could be a professional, it could be a doctor, chemist, it could be, you know, an accountant. So not just looking to sort of get into the property market. And generally always helps if they've got sort of assets in the background. That adds further comfort to what we look for. So in terms of what we try to do is help the borrower to achieve that. We're looking to help and work with the borrower to achieve their objectives. We look to see if there's sufficient profit within the project. You know, does the deal work? Is it worth doing? Is it worth, you know, spending 50,000, 80,000 pounds on that property if you're not going to get out of that property, you know, that sort of property project as much as you think you are? Do the figures actually stack up? Are we actually right for each other? There's different lenders have got different appetites, and I think it's important that we sort of remain clear and sort of we're transparent with both parties. And as I keep referring to, the exit strategy must work in terms, does that property, that project fit well within the area that it's located in? Are there lenders out there that want to take on this project as a buy to let or as a HMO? So exit strategy is very much key for is for us and should be for the clients as well. So it's not just what we would do, in terms of our due diligence. It's vitally important that borrowers do their due diligence in terms of looking at the lender, in terms of what size is the company, how long have they been sort of operating. Roma's been, we started out in 2010, so we're firmly established and remained in this specialist property sector for some time now. Do a little bit of digging in terms of the background of the owners, who they are, who are the underwriters, who are looking at the cases and underwriting them on a daily basis. Another important feature is funding lines. How many funding lines does the lender have? What we're sort of seeing is, if you're reliant on a couple of funding lines and they change their criteria, then in terms of funding being available, it may dry up. What I would say is Roma, we've got 9 different funding lines, and different deals go into different buckets. So there's ample funding across all sectors, which gives us great confidence to go out and sort of support people in their drive to achieve what they want to do. So in terms of funding lines, where do they come from? Different banks, peer-to-peer, building societies, high net worth individuals. They've all got sort of different parameters in terms of where they sit. But in terms of, we've got a nice sort of selection across the board, really. And another question in terms of which crops up quite frequently is sort of drawdown. So if your project is coming along, you want to be able to know that when you decide to draw down some money to move on to the next stage of the project, that the monies are available and are available quickly. So it's obviously, cash is always king. So I think that's something that we pride ourselves on, in getting monies out very quickly to our borrowers. One of the other questions, I think, is if something goes wrong, we've generally are seeing, I think it's more so in sort of recent years, that a quarter of our customers do run into difficulties. They've run out of time or run out of money, are two of the main sort of factors. So we're here to help. I think the dialogue, speak to the lender, is also paramount, really. How many loans do they write? What sort of levels of business? In terms of what Roma does, we sort of lent 125 million last year, and that's sort of, we're in line to sort of do similar or just above that this year as well. And another factor is in terms of how that lender performs, how many loans have they had to repossess, what type. It sort of indicates what type of risk profile customers that they're actually taking on. I'll be happy to confirm that Roma's default repossession is extremely low, and has been since it's been operational. So this interesting slide, this one, as you can see, there's due to expect around 40% growth in the bridging market up until about 2025 in the commercial sector. And as you can see, we've got residential, commercial, development, second charge. The residential area is pretty consistent. It's fairly, I wouldn't say static, but it's sort of very stable with sort of smallish sort of gains. But that sort of seems to move on in sort of 2-3 years time. But the one to me that does stand out is commercial. As you can see, more than doubles over that period, and is consistent sort of excuse me, throughout. So, and again, in terms of development, I mean, we're sort of seeing a lot of development lending. There's a lot of push from obviously the government to increase housing stock. So again, that's pretty consistent. Great opportunity for ground up development. And the second charge is sort of a very specialist sector, which we at Roma don't have a particular sort of appetite, and we deal in that sector a lot. But I think across there, the ones that do stand out are definitely the commercial and development. So in terms of top tips, just a few tips here. I think I would sort of look for properties, development areas, projects that are sort of local to the council government, where they are generally investing money in that area. The likelihood is that it'll attract people, and the profit is likely to be greater. In terms of contingency, I would always look for an absolute minimum of 10%. Ideally 15% contingency. Build that into your build costs, into your works, because as we've seen, the build, costings are continue to increase, even though they're sort of slowing down. But it's always nice to have a buffer in that deal, should you need it to. And I keep going on about exits, but it is vital in terms of the type of project that you take, that you're taking on. Is the exit viable in terms of, are there buy-to-let HMO lenders out there that are willing to lend to you and to the level that you require on that project? So yeah, and always have more than one option. So if the property intention was to renovate it and convert it and sell those units off, if you're not able to sell all those units, or the market becomes a little bit stagnant, is there another option? Does the buy-to-let, the HMO option work? So, because the last thing you want to be done is to be left with something that you can't move on, and you're tied in terms of the funding that's being put in place to assist with that project. And sort of keep the lines of communication open with your lender throughout the project. Keep us informed of how it's going. If there's any assistance you need, I think communication throughout is very, very, very important. So that's sort of summarizes it. In terms of, obviously, I'm happy to sort of reply to any questions you may have. Roma's direct sort of contact is there, but also my personal contact, email, phone number is there, should you wish to even contact me after this presentation, or I'm more than happy to run through questions now if you've got any. Okay, it's all very quiet. So that's fine. As I say, my contact details are there. We will send out the short video, so you've got access to it. But yeah, feel free to make contact, and thank you very much for your time, and hopefully see you soon. Thank you.